The Relative Strength Index RSI is composed of values from 0 to 100. 50 is the dividing line. In general, RSI values above 50 indicate strong prices. Below 50 indicates being in a disadvantaged position. Key to the application of RSI indicators lies in the concept of overbought and oversold. The so-called overbought. The buyer's strength is too strong. We have reached the end of the upward trend, indicating a decrease in prices. Overselling is the opposite. The seller's strength is too strong. The decline is about to end, indicating that prices are about to rebound. Generally speaking, the value reaches 80, entering the overbought area. Below 20 is the oversold area. RSI can reflect a period of time, market prosperity. Among numerous technical indicators, one of the most classic indicators. But in practical operation, RSI is generally used to cooperate with other indicator transactions, less used alone, as an auxiliary role. The most common usage of RSI. It is to judge the profit and loss of closing positions, due to RSI overbought area, representing the end of a round of upward trend. So investors who previously entered the market and went long, consider closing positions in the overbought area. On the contrary, if it had been short selling before, you can wait until RSI reaches the oversold area. Choose to close the position. Combining the role of RSI with other indicators will greatly improve transaction success rate. For example, compared to another traditional technical indicator, matching of moving averages. Thread the long thread according to the short thread. Traditional strategy of going long. For example, around 6:22 on September the 13th, enter and long Brent crude oil. And then on September the 16th, after RSI enters the oversold area, close the position. The price is approximately 66.82. Can lock in relatively substantial profits. Compared to other technical indicators, the biggest feature of RSI, because it contains relative concepts. When we enter the market to buy up, naturally, they want to close their positions at a higher level. Vice versa. But how much higher is it to be considered high? At this point, RSI will provide you with a basis for judgment. For example, RSI paired with 30 pounds minute chart. It will tell you, the high point on October the 16th is not high yet. During this period, the highest amount of pounds can reach RSI in the overbought area on the 17th. And 4 hours ago, RSI fell into the oversold zone. That is to say, characteristics of RSI relative concepts can help determine price. When are relative high and relative low prices as a basis for transactions? It is precisely this characteristic, decided that it is a technical indicators that are difficult to replace. It is worth noting that flexible RSI response, frequent appearance of morphological signals, but sometimes it's not an accurate buying and selling signal, but rather a trap set for investors. The application of the strong-weak boundary is very easy, but the difficulty lies in the effective confirmation after the breakthrough. Just the RSI line crossing the boundary. Not enough. We need to continue to operate vigorously towards breakthroughs. The credibility of the signal is only high if RSI breaks through, quickly turn back to the previous side. So the future trend is questionable. In addition, it can also cooperate with observation. Changes in trading volume. When the bottom shape appears in RSI, increased transaction volume. As support, it has higher credibility. Same shape at the top. Investors can utilize the above methods to identify false signals, to avoid financial losses during operations.